recording as well. Today we're going over Euro USD and Euro JPY, just a little look over. This is the topics that we're going over today. All right, we basically presented it in here as well before the meeting. How to properly identify market structure on a micro and macro basis to help with trade execution timing. So basically going over micro and macro via different time frames and the structure. Differentiate candlesticks on a multi-time frame perspective to determine your trade entry. Which sessions present the best setups to give the most pips, and how to identify patterns in the markets that can predict specific outcomes with major accuracy. All right, let me know, you guys in the chats, if you guys are excited, if you guys want to hear more, if you guys want to see more live streams like this. We have various different live streams that I have pre-scheduled. So I believe in the next 2 days there's another one. All right, good to see you guys in here. Good to see you, Biju, Daniel, Christian Hernandez. Awesome, great to see you guys in here. Yoan. All right, let's get started. So we're looking at, right now, we're looking at Euro US dollar on a 1 hour time frame. Now, we're going to go over the previous week, what happened this previous week and the previous week. We were able to catch a nice move here on this nice move up the previous week. But the previous week here on Euro US dollar, we're going to actually go on the 15-minute time frame. It was actually a beautiful structure, a beautiful setup, not only for a midweek reversal type setup, but also that Tuesday reversal as well that happens in the beginning of the week that we talk about a lot. We're going to go over how to properly identify what I personally saw on a multi-time frame perspective, so to say. So obviously, before this happened, this occurred, right? This very bullish trend. Now, this bullish trend, it took about 2 weeks to form. The market doesn't just trend forever, all right? The market has to retrace or reverse at a specific time. Why? Because if they keep going in that direction, retail traders are going to make a bunch of money, and that's not the goal for them. The goal is to take out the retail traders, to make them see what they want you to see, to get in your position, and then take you out of your position, take your money. So what did they create here? A very obvious uptrend. Here I have marked Sunday, Monday. Here is the previous day. The previous day would be Friday. This day would be Tuesday. And what I like to do here is just mark out the days of the week. This really helps me because I understand structure by, well, weekly structure and daily structure. And combining the two can give you hints into how the future might react or how price might react in a near future. So we have this basically this entire week drawn up here. What do we see about this week that's so special? Well, Sunday, Monday, they basically consolidated all day, right? Sunday, Monday. Why? Because the next day, they were going to use this consolidation to manipulate the people that were trading inside of it. What do I mean by that? So let's say you're a retail trader, using support and resistance as your main strategy, what are you most likely going to do? Place a support here, place a resistance here, and voila. There you have your strategy. Now combine it with a trend line or two, right? This would seem like a perfect sell opportunity. Why? Because, well, number one, it broke out of this trend line here. Number two, it broke out of this supposed major support. What, can I get some people in the chat to tell me what this is, what we call this, what we consider this to be right here? Stop hunt, trap, sellers, trap. Yes, thank you guys. Thank you, Nomad, Miles, Yohan. You guys are the best. Yo, induction, that's exactly what it is. It has a lot of names, but it's the same thing. It's a induction where retail traders are being induced to sell. Why? Because their confluences or their confirmations are being met, right? So what are their confirmations? I'll repeat them again. The trend line, the bottom trend line is being broke here. Boom. Now a major support that they have drawn here, why would they maybe draw that there? Well, maybe because the entire previous day and the half of the previous day, they took the entire day to make it look like that's a major support. So retail traders, what are they going to do? They're going to plot their major support line there. Anywhere in this place. Now what happens afterwards? This is going to induce retail traders to sell. So let's extend this box out a little bit more to understand the sessions, because if we can understand all of this structure and everything is a real nice. However, we need to understand the structure, the sessions as well. Why? Because certain sessions have certain characteristics. The Asian session, for example, is known for its consolidation. Not all the time and not in every pair, but 80–90% of the time it stays in consolidation the entire London Asian session, or at least 75% of it. So we can see Asian session right here coming to a beautiful consolidation. It's used as well to connect one day to the next. So you can see Asian session. Now, what happens after Asian session? We have London session. London session, its characteristic is a breakup, right? So what is it breaking out of? It's breaking out of this previous session where they created what looked like a support and resistance, right? London session, breakout. How do we know this is London session? Well, I have a really good tip for you guys. Click on this tool right here, this ruler, and hopefully you guys already know what this black line means. But if you don't, right click, go to settings, go to appearance, and go to session breaks. All right, this will enable these lines. This marks every 24-hour period. Now what I do is I click on the ruler and I go and I click on the black line starting the start of the day, and I go exactly 10 hours. Exactly 10 hours in is London session. Give me a second, you guys. I'll be right back in 1 second. All right, I'm back. So we got London session right here on this black line that we're going to mark right here. Exactly 10 hours after the previous black line that we marked right here, the start of the day. 10 hours into the start of the day is London session. So we can see exactly 2 candlesticks or 3 candlesticks before London session. What did they do? They induced that sell-off. They broke out of that range for Asian session consolidation. So here's that range. Here's that price range where price is acting, where price is consolidating. Now, this is all Asian session. We come to London session, breakout, induce the retail traders to sell. All right, this is that trap, you guys. This is exactly what you guys said, the trap, the induction. It has many names, but it's all the same thing. What happens after they trap these sellers? The market reverses. The market does a complete 360 opposite, 360 flip. There we go. And takes the money away from those retail traders that were induced to sell. This was a 100 pip move. This is what I like to call the Tuesday reversal. Why? Because, all right, like I said in the beginning of the session, the certain sessions have certain characteristics. Not only certain sessions, but certain days as well. Specific days have specific characteristics. Now, Sunday, Monday, one of the characteristics is that it just consolidates. Why? So that the next day, they can completely manipulate all the people that were trying to trade this consolidation. Now, this is known as the Tuesday reversal, the reversal before the midweek reversal. It happens off the lows or highs of Sunday, Monday. In this case, they manipulated off the lows of the previous day, Sunday, Monday. Now, from the low to the high was about 180 pips. How could we have judged this as a reversal right here, right in this between Wednesday and Thursday? How could we gotten in here? Well, let's take a look at the previous week, Friday. Something special happened on Friday. The market created the high of the week. This would be the high of the previous week, looking at this week right here. Now, let's go on a larger time frame to see what this actually looks like. This is why I like to combine different time frames, you guys, because using the 15-minute is great, and you can see the structure really nice. However, the 1 hour is a lot less messy, so to say. There's 4 times less candles. Here we can see the consolidation very easily, the manipulation, and this was just 4 candlesticks. Right here, this trap consisted of about 4 candlesticks. That's a 4-hour move, 4 hours to trap retail traders selling, and completely reverse. Now, come Wednesday, Thursday, they're making that high. Where do they manipulate off the high? They manipulate off the high of the previous week. Why? Because there's liquidity up there. Notice how they get to that point and they break out of it. Come back, break out of it. Come back, break out of it. Come back, break out of it. And they keep doing that, inducing that buy-off, inducing the bullish move. Yet, they know that they have to reverse because there's so many people that see this as an uptrend that the market has to reverse. The trend has become absolutely obvious. Not only that, but they're respecting so many different confluences, so many different confirmations that we're seeing here. Friday, they created the high. This is the high of the previous week. They work off the high of the previous week. Wednesday, Thursday. What do we expect Wednesday, Thursday? What is that characteristic? The characteristic is the midweek reversal. Now, it doesn't happen every week. However, if there wasn't a midweek reversal, it's very likely that there may have been a Tuesday reversal. And if it doesn't happen on the pair you're looking at, that's why we look at multiple pairs. Because if the reversal, either Tuesday reversal or midweek reversal, doesn't happen on the pair you're looking at, you can easily go and look at another pair and look for these characteristics. Look for these specific confirmations. Now, check this out. Wednesday, Thursday. Let's look at a 15-minute time frame. Look at this big, fat, green candle. Now, when I first started trading, I don't know about you guys, but I looked all over. Like I was completely clueless that this entire game was just set up, that the wool was being pulled over my eyes. I had no idea that there was actually like a group of I guess you could say, like, it's like a conspiracy that this is being done, right? And that we're being fed absolute bullshit. One of the most bullshit things that I was fed was that just look at the candlesticks. And if you see a big fat green candle like this, just buy. Now, you had to combine it obviously with a few other different confluences, like the breakout of a major support or resistance, or going with the trend. These are all things that retail traders use, and that maybe even you and I have used as retail traders as dumb money, and we were screwed over by it. How many people have gotten screwed over by this? I know I've been screwed over by it when I first started trading. I was literally told just to buy a big fat green candle. And the dude looked like he was a professional trader. Like he looked like he was actually making money just buying a big fat green candle like that. Like, yo, you've got to be kidding me. And the people believe it. Like, that's the worst part, that I believed it. Yo, I wanted the easy way out. There is no easy way out in Forex. You have to put the work in. I've seen a lot of my students, a student on Facebook commented, yo, I don't know, like, what's wrong. I'm not being profitable, but yet like I only study like once a week, twice a week. And I'm like, yo, bro, you gotta study like hours a day if you want to do this. If you want to understand this, if you want to decipher the market, like it's a code, like it's a language, like as if you want to learn a new language. I speak, I'm fluent in Spanish. And sometimes it's even harder for me to be immersed in here in Costa Rica and, speaking Spanish 24/7 and then hop on a Zoom call like this and then just completely flip-flop and speak English. Like, even though English is my native language, sometimes like I get tongue twisters and stuff. So it's all about learning, you guys. Learning that Forex is so much more complex than we've been taught. It's not just buying a fat green candlestick. It's not just following the trend. It's not just, support and resistance. It's so much more than that. Yet we've been taught that it's just that it's just, follow the trend. Buy the breakout. How many people were buying the breakout here, right? All right, let me see what's going on in the chat. All right, some people said they can't hear the audio. Hopefully the audio is fixed. Audio is all right. Let me know if you guys can Can you hear me correctly? You hear me all right? All right, differentiate candlesticks on a multi-time frame perspective to determine your trade entry. Where would we get into this trade? Obviously, we're looking at the different characteristics. Wednesday, Thursday. We know that Wednesday, Thursday is the midweek reversal type setup. Now, personally, I don't know if I would have gotten in right here, because this is, I believe this was Asian session, somewhere around Asian session. However, the next day gave me an opportunity off the high of the day to get in. Asian session consolidation, breakout, and there's that M off the high of the day. And you can see how they spike off the high of the day. And if you didn't get a chance to get in here, they gave you one more chance right here. Let's look at how this looks like on a 15-minute versus the 1 hour time frame. What are retail traders thinking when they see this? Can I get something in the chat? Could I get someone to answer that? What are retail traders thinking when they see this? Let's say just this. You know, you can't really see that. What are retail traders? What's going on in the retail trader mind? This big fat green candlestick just broke the support, or no, resistance. And now what's happening? Yes, perfect. Actually, we got some awesome answers in here. Closing above resistance, consolidating on resistance, resistance turns support 100%. And not only that, but it's creating higher highs. Okay, this was the high of the previous day. What's a characteristic of an uptrend? High creating higher highs and higher highs. This was a high, this was a low, this was a high, this was a higher low, and this was even a higher high. This to the retail trader is a perfect uptrend. You see how they induce on a macro and micro basis. There's so many different inductions here. There's so many different confirmations being used for retail traders to get in, right? To continue, okay, they're going to continue this uptrend, right? Supposedly high or low, high, higher low. This was your opportunity to get in. How does this look on a 1 hour time frame? Again, why do we use a larger time frame for confirmations as well? Because you see how that big fat green candle was once a big fat green candle that closed way up here? On the 1 hour time frame, we can see that was a big fat wick. A massive wick. Just to trap retail traders in the wrong direction. There's also another confirmation here that I'd like to kind of give out. This was somewhat of a signature trade, breakout to the high and formation off the high and reverse. Those that can see it, can see it. Those that can't, maybe need a little bit more back testing. But it's funny that, you know, on the 15-minute time frame, even the candles were closing at higher highs, making higher highs. What do I mean by that? These candles here, the body of these candles closed here. The body of these candles closed here, making a higher high. Yet, if we look at a 1 hour time frame, it's way lower. It's always good to give yourself confirmations using different time frames, you guys. You know, if you don't see, if something doesn't look right on the 15-minute, wait. However long you need to wait, right? The max wait is 4 candlesticks for a new 1 hour candlestick to form, right? Does that make sense? Because if the 15-minute looks a little bit messy, all right, go into the 1 hour time frame and see how the 1 hour candlestick closes and wait for that as your confirmation. Which sessions present the best setups to give the most pips? I'm sure you guys already know that. It's either London session or New York session. Asian session, most of the time, like I mentioned, is just that consolidation. What would be your stop loss? CS asks, at the high, EU loves to keep stop hunting. Well, what I like to do is I like to first identify the major stop hunt. And if I can't get in on that major stop hunt, and how would I know that it's actually a major stop hunt, right? Well, there's different confirmations that we use. Where do stop hunts occur? Off the high or the low. And that can be in many different forms. Off the high or the low of the day, off the high or the low of the previous day, off the high or the low of the week, off the high or the low of the month, the previous week, right? These are all different confirmations to use and understand the stop hunt. How do we know that this is a stop hunt? Right here. Because they're stop hunting where? Off the high of this previous week. If we were to wait for this candlestick to close, this 1 hour candlestick, we could place our stop loss above the previous candlestick high. That would be about a 30 pip stop loss. And we know that, well, this is a massive, massive uptrend. If we can get in with a 30 pip stop loss, we're going to go for at least 100 pips. At least. Why? Because how many people were buying into this trend that they need to remove? How many people bought right here that needs to get stopped out? We're always putting ourselves in the shoes of the retail trader. Now, that doesn't mean we want to be a retail trader. We want to be in their shoes to understand what they're thinking at a specific time. What would a retail trader be thinking here? That it's going to go long, that price is going to go long. This green candle, this wick, was once a big fat green candle all the way up here. I'm sure there's people that actually bought right there as well. So my personal stop loss would be above the previous high. So if we waited for this candlestick to close, or any of these candles to close, you could get in. You could have waited the entire day. You could have waited after this stop hunt and waited until the next day, and they gave you so many different opportunities while keeping your stop loss at a good range, right? A 30 pip, 20, 30 pips to catch 100 plus pips. This move was 180 plus pips in about a day and a half. Total about 225 pips. CS asks when you decide to put your stop loss at break even. So in this case, we already placed our supposed support and resistance, right? These are going to be major support and resistance zones for retail traders. And we can maybe even plot another one right here. So it looks like, price respecting that zone. What I personally do is, let's say we got in here. Our stop loss is up here. Price drops and it's here. I wouldn't move my stop loss until price makes this move. Shifts completely out of its area that it was trapping in, right in here. Until that happens, I would not move my stop loss. And once it happens, that's when I would move it into break even. Basically risk-free trade from there on out. Joseph asks how to exit the trade. Well, we're looking for about 100 pips, 100 pip take profit. What we can do is we can use these support and resistance, that retail traders are perceiving as our zones of take profit. So where would we maybe want to put our take profit zones? Where do we think, because why do we have to understand this? Retail traders are going to believe, they're actually going to believe that if price breaks and comes to this invisible line that they have drawn on their chart, that it's possible that it just stays there and then continues up because it's apparently support, a major support in quotation marks, right? But what really happens is that price doesn't give a shit. Price does not care about your invisible line. Why? Because it has a mission. It just traps